Term Trading Live with Oscar Carboni. Traders, before we get into anything else, OMNI Camp comes to the UK, baby. It'll happen in the next 30 to 60 days. If you are in the UK and you would like to grab the last OMNI Camp I am going to do with a group, please go to omnibootcamp.com right now. The link is below this video and fill out your OMNI Camp applications. I will be in the UK sometime at the end of October or in November. The date to be announced, but you've got to fill out those applications if you want to spend OMNI Camp with Oscar in the UK. Click the link below. Make sure you fill out those applications. I'll get right back to you. Now, what's going on out there? There's so much. Look at my board. I can't even read all those letters. There's so much on there. All right. Futures trading, stock trading, you name it, ETF. I don't care if you're trading cryptos, options, anything that you trade, baseball cards, I don't care what they are. There's risk involved in trading. There's risk involved in everything that we do when it comes to markets. So please put your stops in and put them in first before you ever begin to trade. Now, let's take a look at this board. So for trading on 9/18/2024, that is Fed Day number 2, decision day. The Fed is getting ready to lower rates. We know Jerome Powell is cutting rates. Now, I would like to just talk about this for a moment because I've been doing this for 43 years now, right? This is 4 decades plus. Watching every day, watching everything that goes on, really paying attention. And here's what I'm looking at. The stock market is at all-time highs, the most highest it's ever traded in its entire existence since the United States began. Happened today, right? So we are at all-time highs. Employment is pretty darn strong in this country, wouldn't you say? It's not like there's unemployment all over the place. You want a job, you go find one. The economy is on pretty solid footing. Not a broken mechanism out there like the 2008 derivatives or real estate, whatever you want to call that, but we had a broken mechanism and they had to lower rates, boom, 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 to try to push things back up and spur things, right? We don't have a huge geopolitical event type of thing like COVID going on, and we're lowering rates. Why lower rates at this environment? Why are we lowering rates right now? Well, I have to say, I've gone over dozens and dozens, more than that, I should say, of charts to try to figure out why the Fed would be lowering rates while the market's making all-time new highs. I've never seen that in 43 years. So I did enough analysis, and I think I understand the reasoning why, and I'm going to let you know my reasoning by the end of this video. But we've got a lot of charts to look at, and let's take a look at what's on the board. Number 1 on the board, first of all, we proved once again charts do not lie. 2 weeks ago, I told everyone when this down move started, listen to Uncle Oscar. I am showing you the charts and the reasoning why the market has to go back up. We rallied up and made all-time new highs. That's charts not lying, right? You guys can say anything you want. I told you that way before it was going to happen. Put it in my videos every day until it happened. That you can't make up, kids, right? That was when the markets were crashing. Everyone on TV was going, oh no, forget about the soft landing. We're going to crash. It's going to be like a meteorite smashing into the planet. The dinosaurs are going to come back. People were going crazy, right? And suddenly, boom, I come out with a video and go, everyone calm down. We're going back up. We went back up. No crystal ball, kids. The charts do not lie. With that in mind, why does the Fed, the FOMC, the Federal Open Market Committee, if you will, why do they lower rates? Why does the Fed lower rates to begin with? Any economists out there? Now, one of the things I will tell you is if you want to write back to me in this video, I don't care if you love the Fed, hate the Fed, think they're right, think they're wrong. The video's not about this. So you'll see what it's about. And when you do answer some questions or give me your comments, make sure it's about the substance of this video, not whether or not you hate Powell. I don't care about that, okay? Everyone's got an opinion. We'll keep that off to the side. So, why does the Fed lower rates? Well, A, to drive up a stagnant inflation episode, right? If you've got stagnant inflation like we had after COVID or after the 2008 crash, or either of the two, you had to lower rates to push things up, right? B, to spur job creation in a stagnant job environment. We don't have A and we don't have B at the moment. Usually, the market is in a tailspin. The stock market's going down when the Fed comes out and lowers rates, usually. And D, it fuels a failing or stagnant real estate market. We don't have A, B, C, or D happening right now. Why are they lowering rates? All right. Raising interest rates, what does that do? That cools down a booming market like we have right now. You'd raise rates to calm that down, not lower them, right? It slows down a booming real estate market. Well, if you're lowering rates, it pushes up a booming real estate market, and we have kind of a booming real estate market. It's out of control, but it's running up nicely, right? Prices are strong on houses. So you'd almost think, shouldn't they be raising rates in this environment? Puts the brakes on the party. When you raise rates, literally, it puts the brakes on the party. You ever hear the old adage, keep dancing until the music stops? You must have heard that before. People have been saying that for 100 years in the stock market. Do you know what that really means? The market continues to move higher until the Fed raises rates. That's what they're referring to when they say keep dancing until the music stops. Well, they're not stopping the music, they're cranking it up. You know what I'm saying? Where could this go to? What could it equate to? I don't care what the first initial move is after they lower rates. If it goes down, up, does not matter. That's not the move you should look for. What you should recognize is this is a stimulus that they're about to do, and a stimulus means it's going to drive the market higher no matter how it ends up after the Fed speaks. You will see that this will push the markets higher. Might not be tomorrow. This is going to move the markets up. It's a stimulus. This is what you would do if markets were crashing, if real estate was, well, if things were bad. Let me just say that things aren't bad right now, right? If things were bad, you would do A, or you would do A, B, C, and D, which means you would lower rates. If you wanted to slow down a really booming economy and a booming stock market, you would raise rates. Well, I think we have a booming market and a great stock market, a great real estate market. I don't know. I think either raise rates or do nothing here, but then there's got to be a reason, right? Now, the Fed, once again, whether you hate them or love them, they're not stupid. The Fed is not stupid. The Fed has always done a pretty decent job getting us out of trouble. Now, why? Being that the Fed seems to make moves correctly, they have in the past in most cases, why are they lowering rates in an environment where you would think the Fed would either raise rates or do nothing? So after going through all the charts and everything I can go through, I did come up with the reasoning. But I want to go through the charts with you first. So I've got charts to sort of prove a lot of the stuff on this board. I think I'd like to show you that chart segment first. And at the end of the chart segment, I'll come back in front of the camera and explain to you why I think they are going to lower rates on Wednesday and what their reasoning is, because it doesn't really fit the math that they would use to lower rates. I mean, it just doesn't fit. There must be a reason. Why is the Fed lowering or cutting rates? If you want to find out, you're going to watch this chart segment with me, and then we'll see why. Are you ready? 1, 2, 3, let's go! Look at some charts. Traders, this is how we proved that charts do not lie. If you remember, I put this out in front of you in a video 2 weeks ago and said, don't get nervous, because once this right shoulder of the inverted head and shoulders, once the right shoulder resolves itself, there's an exit door it's going to use. And I put this exact chart in front of you, and I even calculated where the exit door should come in. This is where it was when I started telling you not to worry. And this is what happened. I mean, come on. Is that not sick? And it literally exited the door on Tuesday. It's right there. That's a daily bar right outside the door. Can anyone else do that? Come on, guys. Nobody can do that. That's insanity. And I show this to you all the time. That is just reading technical analysis, and you can learn that too. Make sure you join me at my OMNI camp. Next, the NASDAQ. I will say this. Very precarious position that it's in right now. Very interesting juncture. Right before the Fed's about to make a decision on Wednesday, they ran the NASDAQ all the way up to this spot where it hits the resistance line. And if you remember this average that I was showing you when we were starting to go down, it's at that average too. Very interesting. Right now, lowering rates is supposed to push a market up, but you know, if they don't do a half a point, there could be a bunch of lunatics out there that think that's not enough and it's going to crash. Who knows what it will do, right? That's why the first move that you see, you're going to not pay attention to. You're going to wait for the next series of moves to take place, which will be the true move. In any event, That's a good spot to go short if you're somebody using technical analysis. I'll tell you right now what happened. As soon as the market hit there on Tuesday, it dropped 350 points in NASDAQ. So I'm not the only one that's seen that spot. Dow Jones, once again, why is the Fed lowering rates when the highest the market's ever been in its existence is here today? Would you lower rates to push a market up further when it's making new highs? No, but lowering rates pushes markets up. So, all right, that's why I was going, this doesn't make sense, but eventually it does. When you go through enough charts, you see that it's probably the they're worried about. T-bonds. Now you've got interest rates dropping because as bonds go up, interest rates drop automatically, and Powell didn't even start dropping them yet. Soon he's going to drop them, and higher they should go. And as the bonds move higher, the interest rates will continue to drop on their own, whether the Fed changes rates or not. And now you've got Bitcoin. For you crypto fans, Bitcoin absolutely held that spot that we were waiting for. It's been rallying, and if you ask me, it looks like it wants to move higher and make its way back up here to the top of the flag. One day at a time, keep your eyes on Bitcoin. The dollar index. Now, our dollar index has been dropping a lot. And now this, if you ask me, is an absolute bear flag, and we're right at the bottom of the bear flag on the day the Fed's about to lower rates. When the Fed lowers rates, you know, sovereign funds, big trading funds need less dollars and more foreign currency is what usually happens. So that becomes a drag when you lower interest rates on dollars right when there's a bear flag. That makes perfect sense. And if dollars are in a bear flag and they have been moving down, it makes things like the euro currency, which is in a bull flag, and at the top of the bull flag, the data are about to lower rates in the U.S., which should push the euro higher. Makes perfect sense, right? Bull flag in the euro, bear flag in the dollar. Now the dollar moving lower is going to do things like help crude oil start to move higher, which we don't need, but that's what happens when you lower dollars. When the dollar keeps going lower, the price of crude starts to recover and move higher. Now nobody needs to see that, but that is what will happen if the dollar keeps pushing lower. But it's not just crude. You'll get markets like gold, which just experienced a beautiful bull flag that we all followed for days on end until it broke out. I was showing you this in my videos, right? Now, the dollar moving lower should help gold, even if it comes down a little, return to the upward rally. And you've got markets like palladium, platinum too. I was going to say platinum, but palladium's the chart I have in front of you. Platinum and palladium are starting to feel the cheaper dollar. Look at that massive run in palladium. And then you've got the E-mini S&P. Once again, just a reminder that we should end up filling this in and moving higher because it's exactly what happened here. And repetitive patterns are the cornerstone to accurate technical analysis. Traders, I hope that helps. Make sure you fill out the link below and come join me at livewithoscar.com. Traders, you've seen that chart segment, and there's really nothing in the charts that would tell me that it is time to lower rates. But after doing all the research I could do, I came up with what I think is their reasoning. Now, how could I know for sure? I don't, but I have been following for a long time very closely. And here's what I think it is. Now, remember, the Fed doesn't try to fix what's going on now because now happened and it is here and you can't fix now. So the Fed makes decisions on things they see in the future, a year out, 2 years out. That's what they work on. If they do something today, it's not going to fix today. That's already in place. It's going to help something in the future. They're always looking ahead. Here's what I think. Because we're at a booming stock market and real estate is just fine and there's really no need to lower rates for economic reasons, there is this, and I think the Fed is calculating this. Somewhere between 20 to 30 million new people have come into this country, somewhere between. If you register or if you try to get a license, it automatically registers for you to vote, which means you're going to end up in the system. No matter how they end up in the system, 20 to 30 million new people are in our country. A lot of them will end up in the system and they will end up on the unemployment figures, and I think they're worried about that. Now, 20 to 30 million is a lot of new people to give jobs to. I think the Fed is seeing that once they're finally established here and being counted, which isn't going to be too long from now, they're going to need jobs or they're going to hit the unemployment level. The rate will be seen by unemployment, employment, however that's going to be. I think the Fed is trying to react to stave off what we are going to see in the employment figures in the future. That is my assessment after all the work you've seen me do, plus a lot of work you didn't see, plus I did fundamental work. That is the reasoning I've come up with, and I believe I am right. We'll find out in the future, but there really is no economic reason for this rate reduction that will happen on Wednesday. Anyway, that's what I've seen. I hope this video helps you. Make sure you come on down to livewithoscar.com, like and share these videos all over the internet. Make sure you click the link and fill out your OmniCamp applications in the UK, and then keep your emotions out of trading. How do we do that? Well, if you know me, you're going to say this. What do we call it? It's not quite an adage. What would you call what we have here, this saying that we use about stops? I mean, it's an adage, but it's not. It's just a mantra, I guess, right? It's all mantra. Say this to yourselves over and over again when you're in a trade. I promise it will help. Are you with me? 1, 2, 3. Stops are in. Emotions are rock and roll traders. I hope this video helps. I will see you all at livewithoscar.com.